Welcome to this presentation of what is the difference between conservative and aggressive trading. This is the Specialist Trading Weekly Stock, E-mini, and Forex lesson. Hello everyone and welcome. This is Steve Primo. I am the president and founder of Specialist Trading. Now, each one of the strategies that we have at specialisttrading.com comes with a conservative as well as an aggressive version, and I'm going to define exactly what the difference is between the two in today's presentation. But before we begin, I ask that you please take a moment to view our disclaimer. I'm going to show you performance results using these two versions of our trading strategies. But please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated. So please take a moment to view our disclaimer, and then we shall begin this week's Stock, E-mini, and Forex lesson. Okay, as I stated, all of the strategies that we have at Specialist Trading come with two different distinct versions, a conservative way to trade them as well as an aggressive way to trade them. But many of our students, especially those beginning members, ask what exactly is the difference, or how do we define that? How do we define it so that we can choose which style we want to trade? Well, the definition that we have here between conservative and aggressive is, we'll start with conservative. Conservative trading means that you stay in the trade for a minimal time. We don't want to be in the trade that long. That way we are, knowing that the disadvantage is we're not going to have a large gain because we're in the trade for a rather short time. But the advantage is we're going to have less risk. And that's why we label this as being conservative. When you're in the trade for a smaller portion of time, you have less risk. But please remember that with that less risk comes less gains. Now, conversely, if we're talking about aggressive trading, if we really want to define that, aggressive trading is really just the opposite side of the coin, meaning that we are staying in the trade for a maximum period of time. In other words, we are trying to squeeze out as much profit as we can. So we really don't know how long we are going to be in the trade. We're pretty much using our proprietary techniques and tools to tell us when to get out. We're basically letting the market tell us when the run has ended, and then we're exiting with it. So the advantages obviously are, if we're going to be in a nice long run, if we take advantage of that, we're going to have a much, much larger gain. The disadvantage is we're going to be carrying more risk. Okay, this is why we label this as aggressive. We're in the trade longer, so sometimes it's not going to go our way right off the bat. So we're carrying a larger risk because we're holding money overnight, as well as we might be using a more aggressive risk placement, which means that we're carrying more risk because we want to be in the trade longer. Our stop is further back. So these are the different definitions. Basically, if you're trading conservatively, you're really in the trade for a short amount as possible, and you're taking a small gain. And the basic method of this type of trading is you really just want to be in and out very quickly and have a lot of trades where it adds up. All these small little gains add up, a lot of little singles. When you're using the more aggressive style of trading, you're really looking for that home run. Now, even though it's not advised, we're not really trying to always hit home runs. We'll show you that when you do use this aggressive style and you've learned how to use it properly, you can from time to time periodically hit those really large trades. In fact, let me show you some examples of how this works. Let's first look at stocks. Now, here's an example in Netflix. Okay, this is actually about a month or two ago. As you can see, we're right below the buy-sell line. So obviously, we're only looking to go short Netflix. There's no reason in the world when Netflix was trading around 100 or so why we would be even considering holding a long position or looking to buy. Why? Because price was well below this buy-sell line, and it had been below for a good month or so. So there's no reason why we'd even think about buying. I don't know why a lot of traders after this recent market sell-off have been complaining or using the the victim attitude as, boy, the market really beat me up here, because so many stocks had the same type of formation where you're below the buy-sell line, so there's no reason to even be in the stock. So right now we're looking for some type of a setup if we want to trade Netflix, and obviously right here, if you've been studying all of the strategies, and our main strategy for stock, strategy number 4, you would have seen that we have a really nice setup bar to go short Netflix. Now, this is the setup bar. It meets all of the rules and requirements. We're not going to go over them right now, but had you studied the strategy number 4 outline in the rules, you would know that this is our setup bar, and if we trade below this tomorrow, we'll go short. All right, so let's see what happened the next day. Well, the next day we actually did trade below that low, so we went short in the opening at 104.89. Now, had we decided to trade conservatively, meaning we only want to be in and out very quickly, we're using the most conservative rules and regulations for this particular technique, we actually would have entered at 104.89 and had our fixed exit at 103.17. So we would have been in and out the same day, not carrying the position overnight, and made a quick, nearly a point and 3/4, a point and 72 cents to be exact. And that's not bad for a quick day's work. I mean, we made nearly 2 points. We're in and out, and you could be in a number of stocks where you could add up small little gains like this, where it could really add up over time. All right. Let's say though that you wanted to trade more aggressively. Well, your entry would still be at the same place. Perhaps you wouldn't have used the standard stop. You would have maybe had your stop back even further. But because the definition of trading aggressively now is you want to be in the trade and you're using our techniques to keep you in the trade longer, well, you would not have exited at 103.17 and you would have held on. And as you can see what happened in the next month, that would have been the wise thing to do. Now, using just one of our more aggressive techniques, which keeps you in the market longer, you would have stayed in the market for about another month. And in Netflix, you finally would have exited or covered your position at 72.41 for a gain of 32.5 points, nearly 20 times what you made trading conservatively. But that's what it means to trade aggressively, though. With this nice gain, though, you were also holding more risk. You had your money tied up, plus you may have had more of a length or more of a direction backwards in your stop placement, so you would have been further back. So you were just tying up your money and containing more risk. But in this situation, that risk paid off. Okay, so you made nearly 20 times more than you made conservatively. Let's look at the E-minis. This same concept we can apply to the E-minis. Now here's an intraday chart trading. This went back just last week on the 12th of June. As we can see here now, we're above the buy-sell line. This is a tick chart, and we're above the buy-sell line. So we're only looking to go long. Now here's a perfect setup for strategy number 1. This is a great strategy to trade on the E-minis if you're more of a kind of an intermediate type trader when you're holding the position for an hour or two. Now we had a great setup to go long at 1308.75. Following all the rules and regulations of this particular strategy, you would have entered at 1308.75. And if you follow the standard conservative way to trade it, about an hour later you would have exited at 1314 for a quick 5 1/4 points, roughly in just an hour or two. That's not bad. That's roughly $250 per contract. If you had 10 contracts, you just made $2,500 in a couple of hours. But even so, 5 1/4 points is a nice gain for just a couple of hours work. All right, but let's say you wanted to trade more aggressively. That means you would have held on to the trade longer. You probably would have had your stop further back down the line just so that you could be in the trade longer to give yourself more time. But if you had only held your position for another half hour till the end of the day, look what would have happened. Using one of our standard aggressive techniques, it would have had you in till the very end of the day. You would not have exited, and you would have exited on the close at 1320.25, picked up an extra 6 points, and now instead of a 5 1/4 point gain, you had an 11.5 point gain, nearly $600 now per contract. So you see, this is another example of when you're using our aggressive techniques, they can keep you in the trade longer. But right now, I'm sure most of you are saying, well, okay, so I get the point then, Steve. The message is we should only be trading aggressively. We should stay in this trade as long as possible, regardless of what we trade, right? That's the way to go. Well, not exactly. Let's look at the Forex markets. Let's go back a couple of months and look at the Australian dollar. Now, we are below the buy-sell line, so obviously we're only looking to go short the Australian dollar. Now, right here, we have a great setup to go short using strategy number 5, our premier strategy for trading the Forex markets. Now this had us enter at 1.0339 right here on this particular day, and 3 days later, 3 days after the trade, very short time for being in the Forex markets, because the Forex markets can have these really nice trends on a daily basis, but only in 3 days we made a quick 75 pips, $750 trading one lot. That's not bad work for just trading 3 days and just trading one lot. So this would have been the conservative way to trade. You're in the trade for as small amount as possible, trading the conservative entry, the conservative exits, and the conservative stop. Now, looking back at the prior two examples, you would have said, well, Steve, obviously you want to be in this trade longer because all the other examples, you would have made 10 to 20 times more your money, right? So why wouldn't you do it here? Well, let's say you had not taken the first exit at 1.0264 for a quick 75 pips, and you decided to stay in longer. Well, 3 days later, guess what? It moved the exact opposite direction, and if you were using one of the standard stop placements right here, you would have been stopped out in 3 days. And now, it actually is a typo. Instead of a 122 pips plus their sign, that's actually a negative. You would have lost 122 pips. So instead of making 75 pips, You just lost 122 pips if you stayed in 3 more days. So this does not always work. I'm not trying to show you those examples and say, well, the way to trade all of my strategies is the aggressive version. That's not true. The best way to trade is the one that fits with your personality, because some traders like to be in trades longer. They have more capital. They have more, or less aversion to risk. It's up to them. So that's how you decide how you want to trade, whether you want to trade conservatively or aggressively. So we basically give you all the tools and the techniques so that you can apply and decide for yourself. All right, so points to remember when we're defining the difference between conservative and aggressive versions. Basically, conservative trading means that you're basically going to be in the trade for a shorter time length, and with this shorter time length, you'll have smaller gains and less risk though. So you're going to have, one offsets the other. The gains are not going to be a lot, but you're not going to have a lot of risk. If the trade does not work out, you'll have these small little losses. So this is for the type of trader who does not want to tie up money overnight a lot of times, or if you're intraday trading, you do not want to be in the trade a long time, and you're not looking for those big home runs. You're looking for a lot of trades that have small little gains. Okay, if that fits your personality, then this is the way you should be trading. But let's say you want to be in for the home run. You're looking for that. Let's say you have some nice fundamental ideas about what a stock, the Forex market, or the E-mini is going to be doing, and you really think there's a big move here. Well, then you want to be an aggressive trader, because an aggressive trading style means that you're going to be in the trade a lot longer. You have a longer time length, and with this longer time length, you'll have much larger gains, as you just saw. But along with that comes some risk. You're going to be having more risk because your money is tied up. Anything can happen overnight when you're holding a position. News can come out and it can go the exact opposite, gap way up or way down, depending on what side of the market you're on. As well, when you're trading aggressively, in the beginning stages, when you enter the trade, if you want to be in the trade longer, you're going to move your stop back even further. So right off the bat, initially your risk will be much more. So you have to decide what type of trader you are in advance. Okay, you can't just say, well, I think today I'll trade conservatively. I think tomorrow I'll trade aggressively. You have to know what best suits your trading persona, because you're not going to feel comfortable trading one that doesn't suit your mood or your nature. Okay? And someone will say, okay, well, how do I find out what that is? I haven't been trading that long. How do I do that? Well, as we always point out in our recap here, the best way to learn that is through paper trading. So many of our students, they fall in love with our strategies, they love them, they see how they work, and they see the examples that we give on these weekly lessons or in the videos on the site, and then they just jump in, feet first, and they don't think about what they're supposed to be doing. They don't really realize or understand the process. And where one student may make a profit because he understands the process, the beginners will lose money because they're not implementing the strategy correctly. So the best way is to always paper trade. I continue to say this. I know it must get boring to a lot of you members who continually watch this, but I cannot stress enough how important it is to paper trade. That's how you're going to find out whether you're a conservative or an aggressive trader. Okay? Our edge here is consistency. The way to get that is through paper trading and then understanding the philosophy and the process behind the strategies and then implementing them correctly. If you have any questions concerning what I went over today or anything on the website, please do not hesitate to email me at stevenprimo@specialisttrading.com. In closing, once again, I ask that you please take a moment to view our disclaimer. I showed you performance results and the difference between conservative and aggressive trading. But please remember that we can in no way guarantee that any of the results I just showed you will be repeated in the future. We're required to give you this disclaimer at each and every presentation we give. Once again, should you have any questions, do not hesitate to email me. If not, have a relaxing, enjoyable weekend, and we shall see you right back here next week. Bye-bye.